morning, everybody, and welcome to the 6th edition of NCCPAP Now, a dialogue among NCCPAP members. Even though we do have some, I know that we have some people here who are not yet NCCPAP members, and hopefully, if this is your first time attending this, welcome. If this is your second time, we hope that you've seen the value, and after this one, we'll decide to become a member afterwards. My name is Neil Fishman, a past president of NCCPAP and chair of the PR committee. So welcome, everybody. So before we get started, just a few housekeeping things to discuss. First of all, it is very important that on your sign-in, we have your full name first and last. I noticed that a few people, we just have the first name. It will be difficult to give you your CPE credits without your full name, even though we have you signed up. So please make sure it is your full name first and last. There will be 6 polling questions given during the program. You must answer them. Each one will have about 45 seconds for you to respond so that we can give you your CPE credits. If during the program you have any questions, please post them in the Q&A section. As each section ends, we will post the questions to the presenter. The slides, the handouts, they are available now. If you look in your chat, you will see the link to get the slides and download them. This program is being recorded. So in a day or two, you will get an email letting you know that it is available now for you to download so you can listen and watch at your leisure. So again, good morning to everybody. I see we have somebody from San Diego even, so welcome, and I'm glad that you were able to get up early to participate in today's program. So we're going to get started right now. Back on November 1st, a new president took office here with NCCPAP. Oh, before we do that, we have our first polling question. So please, everybody, take a moment and respond to it. And as we get to that, again, Frank Sands from the great state of Texas became president of NCCPAP back on November 1st. This is his first time presenting as president of our esteemed organization. So without any further delay, I will turn this over to Frank Sands. Mr. Sands, good morning.
Good morning, y'all. It's good to be here. As Neil said, this is my first event as president of NCCPAP. I'm looking forward to the year to come. And I think NCCPAP has a lot of good things that are going to come to the profession. And I appreciate the opportunity to serve. And by the way, it's 28 degrees here and raining. Okay, trying to advance my slide, but I'm not getting it. There we go, thank you. I had the pleasure of attending the annual Accounting and Tax Symposium held in Long Island in November. The CPE programs, as usual, were timely and valuable for the education of the attendees. And all the folks that I talked to were very glad they came and felt that their time was well spent. I want to reach out to the Education Foundation of the Nessa Suffolk chapter, who is responsible for putting this program together. This is truly a remarkable effort. The logistics are really demanding, and these folks did a great job with this. It was our first in-person in 2 years, and it really went well. I met a lot of folks, made a lot of new friends, and one of the things that struck me was the willingness of everyone to share their experiences. And I want to let you all know that if you need help, Help will be forthcoming. All you have to do is ask for it. I also had the opportunity to visit the vendors that support the symposium, and I found them all to be helpful and open and willing to reach out and give you the help that you need. Next slide, please. We just completed our winter meeting, quarterly conference in Boca Raton, Florida. It was well attended. We also, of course, did it online. One of the things that came out of the meeting is we're rethinking our social media outreach, putting a little bit more effort and more focus on it to see if we can get improved results. We also talked about lease accounting, which is now in place. And if you have clients that are required to do this, good luck. It's tough, but it has to be dealt with. We also talked about insurance and liability issues, and in particular, engagement letters. Norm Fleischer will be presenting a very detailed presentation on engagement letters, and we're looking forward to that. 75% of the claims that CPAs deal with right now are coming out of tax-related issues, and only 40% of our small firms use engagement letters. So it's real important that you have engagement letters, and as I said, Norm will be speaking on that at length. Next slide, please. We also talked about CPE events that each chapter wants to put on. We've instituted an events calendar. We want to use that more now than we have in the past. It's a way to schedule events so that we have better coordination with all the events that the various chapters want to present. We asked that the executive director, Alex, be given 3 weeks notice once the event is organized and there's something to post with regard to the timing of it. Then it can be placed on the calendar. It will hopefully this will foster a community of cooperation and will keep communications between chapters going forward. Any questions with regard to this? We would like you to run it through our education committee, and the current chair of that committee is Gary Brown. We also would like to mention that we discussed speakers for the various CPE events. And as far as speakers that we have used in the past, they've been great and wonderful, but we are not, I should say, we are open to y'all having any ideas with regard to speakers that you've run into that you feel are very effective and do a good job. Please let us know who these folks are. As you may or may not know, we are working to redo our back-end system with regard to our membership management and the computer programs we use to control that or accomplish that, and to present the website as you see it. Tenancy is the name of the company that we've gone with to hire or to move forward with this, and the work has already started. Higher Logic is the company that maintains the front end, which basically means the website and your interaction with it. They will continue to do that work. We also discussed that QuickBooks is going to be discontinuing desktop. Now, for those of us who like desktop, that's kind of sad news, but QBO looks like that's what it's going to be, although it to date has not got the flexibility and the comprehensiveness of QuickBooks Desktop. We hope that changes. And please be aware that Intuit's going to increase these prices, and they're going to be heavy. And I guess that's no surprise. Seems like prices are going up everywhere nowadays. Upcoming meeting, our spring meeting in Washington, D.C., May 10th through the 12th. All NCCPAP members are welcome to attend that meeting. We ask that if you want to attend, that you confirm that, because what we have to do is schedule the various teams that go to the Hill to meet with the various senators, representatives, IRS, Joint Committee. So it takes a lot of logistics work out to do that. So we need to know if you're coming. The tax agenda, we need some issues. We're targeting IRS issues, Congress issues, and Joint Committee on Taxation. The issues that you can bring to us will be appreciated, and the more detailed, the better. It's always better to go in front of these folks and say, look, this is what happened to one of our folks, one of our clients, or this is what we're encountering dealing with the IRS or some of these other tax issues that we come up with. So we encourage you, please, if you have one, submit it to the tax committee. It will be greatly appreciated. We talked about member benefits, helping fellow practitioners in need. That focus will be on, in the case that practitioners are unable to continue serving their clients for one reason or another, then there will be a system in place or a framework in place where other members of NCCPAP can volunteer to help that practitioner as he needs. We also talked about rewards for bringing a member into NCCPAP, and that reward will be a 25% discount off of your dues. We talked about the journal publication that's going to be coming out shortly, and this will be a virtual publication. We also discussed the virtual chapter, and there will probably be some language change coming up in the bylaws, but that's being worked on. We discussed the expanded outreach for scholarships. Right now, we offer our scholarships through Phi Sigma Pi, a professional organization that is on many college campuses. I have recently had a discussion with them with regard to emphasizing the scholarship more, and that is in the works. We also discussed the possibility of going outside of Phi Sigma Pi in offering our scholarships. Please be aware that there was a slight dues increase that was approved, and that will be reflected on your next billing statement. We have 3 meetings set up with the AICPA, and this is out of our ongoing relationship that we have with the AICPA, and it gives us an opportunity to bring our contributions to the fore with regard to what the AICPA is doing and all the issues that we're dealing with there. So if you have any observations or any opinions or any experiences that you would like to share with regard to that, please let us know. Our polling question number 2 is up. Please take the time to answer. I'd like to also mention at this point the CPA pipeline. This is an initiative that's been set up by the AICPA in conjunction with many different professional organizations, NCCPAP being one of them. It's an 8-point initiative, and it's born out of the recognition of the need for more CPAs in the profession. We have a declining perception of CPA as a career. A lot of it has to do with the fact that accounting students apparently believe that the only place for them to go after they graduate is to a Big Four firm, and the idea of working 80-hour weeks and being burned up by them is not all that appealing. The 8-point initiative is designed to maybe debunk that feeling. It also deals with the 150-hour requirement to become a CPA. The initiative is not to reduce that number of hours, but rather is going to be focused on how you get that last 30 hours of the 150 that you need. And one of the things that the AICPA is talking about is integrating the education and experience, which basically deals with, okay, you get your 120 hours. Now you can go get a job with a firm that is willing to work with you on flex schedules and pay schedules to allow you to acquire the additional 30 hours you need. And the form of that is under discussion, and it takes a lot of work, because what we have to do is get the qualified universities and education organizations on board with this. And so that work is going to take a little while, but it's a big emphasis and a big push. And be assured that NCCPAP will be behind this and encouraging this in every way that we can. More specifics about how this will work is the interns get paid while you're earning credits. That's the need for the cooperation from the firm. Firms get access to new hires that not previously available. This is obvious benefit because with all the students that would be willing to do this, it's going to take a number of firms, and plus the fact that we will get more emphasis on smaller firms. And hopefully it will lead to an understanding on the part of the accounting students that there's a lot more opportunity out there than just working for the Big Four. One of the obvious benefits is also that candidates get real experience, real life, hands-on work, and that is invaluable. They also have an expanding knowledge of the industry, because industry possibilities, it's always good to know what's out there. And if you're working with the firm, you're getting to know the various industries that firm works with. This will open doors that may not otherwise have been open for you. So it's a big benefit. What we ask is that everybody gets on board with this. Change is needed, that's obvious. The decline in the number of qualified people is evident to everybody, especially if you in your firm have tried to find qualified people to come and work for you recently. It's a tough deal. We got to increase that supply, and this is one way to do it. There's a lot of work to be done, and so we will hope and please ask that you contribute your ideas with regard to this so that we know what you're feeling and how we need to move forward.
All right, Frank.
We have some time for Q&A.
Yes, Frank, we do have a few questions for you. So the first question we have is, what might we get out of a closer relationship with the AICPA?
The AICPA values our contributions, and in formulating their efforts and their focuses on tax legislation, on problems with tax implementation and administration, and also with professional concerns with regard to the rules and regulations they promulgate that we as a profession have to go by. It's really important that we have that input line when it comes to the AICPA deciding what to do in these areas.
Would that be because we, as an organization that focuses on the sole practitioner and the small firm CPA, that we may have a better insight?
Oh, definitely.
Okay.
Definitely.
Okay. The next question we have is, when you talked about scholarships, are scholarships for the children of NCCPAP members or only those children that are majoring in accounting?
We have scholarships that are for NCCPAP members. Specifically, we have the Carol Markman Scholarship, which goes to the child or descendant of a NCCPAP member. And we recently issued our first one. We have 3 scholarships that are currently available that are listed through Phi Sigma Pi, and they are for accounting majors. It is not required that the person be a child or descendant of a NCCPAP member.
Okay. We do have one other question. It's really more for not necessarily you, but for everybody who is listening to this presentation. And they are asking, is anyone having success in recruiting young CPAs? If so, could you please share that experience with the rest of us? So that is the end of our questions for Frank. So Frank, thank you very much. We are now going to go to our second presentation. Oh, before we do that, we do have polling question number 3. If everybody would please take a moment and respond to that. So while you're responding to that, our next segment, Steve Mankowski is co-chair of our tax policy committee. He is our primary liaison with the National Public Liaison's Office at the IRS. He attends the monthly MPL meetings, and at the end of last year, he was once again named by Accounting Today to their 100 most influential people in the profession list. So without any further delay, ladies and gentlemen, Steve Mankowski. Steve, you need to unmute yourself.
Yes, operator error, Neil. Thank you, Neil, and thank everyone for taking time out of their schedules at the start of filing season to log on to this presentation. Just as a simple reminder as we get started on my presentation, that we have one more day to make sure that we submit 1099s and W-2s through the appropriate resources. And the IRS recently opened a new portal to allow small businesses and practitioners to upload directly to the IRS the W-2s without using the FIRE system. That system's still active for this year, but will be changing probably for next filing season. So just something to keep in mind and maybe work on making a transition after tomorrow. Second is, as Frank had mentioned, about professional liability policies, just keeping in mind that when you have your policy, make sure that you also have the rider for a cyber policy, which helps in case of computer breaches. or a separate standalone policy for computer breaches, as it's becoming more and more prevalent. This morning, I just gotten an email from a CPA firm up in Rhode Island telling me there was an attachment with important documentation that I had no idea who the person was, and the only thing that was different was the actual phone number, but email address and everything else was legitimate. So by all means, as we start into this filing season, be very cautious, have your staff be cautious as to not clicking on any attachments that you're not expecting to be getting from any of your clients. And hopefully your clients will be using portals rather than just sending unprotected emails. So my last point before I hit my presentation was, as Frank was talking about tax issues, the one thing that I'll just add is that we need to make sure that the issues are systemic. Just a standalone issue that you may have had with dealing with someone at the IRS may or may not necessarily be an issue to present to the IRS or to Congress. But if it's something that we're seeing that's more of a systemic type issue, that's really where we want to make sure that we can focus when we go to the meeting in May. So at this point, just looking through the couple changes in tax law that's effective for the current season. If anybody's actually started preparing returns, you're already seeing some of these. Specifically, the child tax credit last year went from $2,000 to $3,000 unless the child was under 5 years old, at which point it was $3,500, of which up to 50% of it may have been paid in advance. This year, the credit is back down to $2,000 and is not fully refundable as it had been last year. As you're talking with clients, keep in mind the gift tax for 2023 is now $17,000. Another item that's no longer deductible is the mortgage insurance premiums that had been deducted as part of mortgage interest on Schedule A, no longer deductible for 2022 taxes, as well as the $300, $600 deduction for charitable contributions, which now are only on Schedule A. Some virtual currency questions. Just keeping in mind that every year it just seems the IRS keeps adding more and more questions. Did I hop a slide here? Nope, didn't hop a slide. All right. So the new question that we have for this year, at any time during 2022, did you, one, receive as either a reward, award, or payment, or sell, exchange, gift, or otherwise dispose of any virtual currency during the year? And they're really making it more and more pertinent that people tend to, if you're not sure, this is really a case where you may be better saying yes as opposed to defaulting to a no. Next, for digital assets, now they are really looking at financial interest in digital assets. It's something that's been on the IRS radar for the last several years. I know that I've presented about this at the various chapters over the last few years, and it's one that is becoming more and more and more prevalent. And it's an area that the IRS and Congress are really taking more and more seriously. And that was before the collapse of the one virtual currency earlier this year. And we need to keep in mind digital assets could also include non-fungible tokens or NFTs. Some other things about virtual currency, they're treated as investments and subject to capital gains. That is, unless you've received it as payment for something, at which point it would be most likely a Schedule C item. However, when you turn around and you're selling it, that's where you would really be looking at treatment as a capital gain. Also need to keep in mind, and this is one that I brushed up on as I have more and more clients dealing in virtual currency, that although virtual currencies are treated as an investment and the sale is recorded and subject to capital gains, they are not subject to the wash rules that normally exist within investments. So you're able to sell Bitcoin today, buy it back later today or tomorrow, and now reestablish your basis, take the loss, take the gain, whatever you may have, but now you're at a point where you don't have to fall under the wash sale rules. Brokers going to be required to report cost basis after this current calendar year. So be effective for the 2024 tax returns. Many of us are already starting to see that the larger brokerage houses and the larger entities that are dealing in virtual currency, such as your Robin Hoods and such, are actually already starting to report more of the basis. This is only a positive. It's only going to get better reporting. But similar to what we've seen when the broker started reporting cost basis for investments, you still need to make sure that the basis that they're looking at is correct, especially in light that you can move your virtual assets between your digital wallets, and at that point they may not have the most accurate cost basis to be providing to you as the CPA preparing the return. And over the course of this year, we're all expecting more and more guidance from the IRS. And keep in mind that there are lots of, as I call them, IRS love letters related to virtual currency for people who have not been reporting their gains and their activity within virtual currency. And can you advance a slide for me, please? Thank you. We had our most recent National Public Liaison meeting this past Thursday. And one of the areas that they really focused on during their presentation was depositing refunds. The IRS, as you know, during COVID, was really making a push as they started getting more and more backlogged, really emphasizing the need for taxpayers to pay their liabilities electronically. There was a way that they could really help ensure that the payments are applied onto taxpayers' accounts. Of course, many of us saw that wasn't 100% accurate, but at least the taxpayer knew that and they had very quick and evident proof of making a payment. The representative from Treasury had noted that there's over 11 million returns that still receive paper checks. We made a point to ask about amended returns, which still are not eligible to receive direct deposit of refunds. And they said that that 11 million returns does not factor in any amended returns, and that overall there's in excess of 26 million checks that they have to issue and deal with accounting for. Their goal is to get 99% of all payments electronic by 2030. And what they're finding is that the majority of the checks that they're still issuing are tax returns. They do realize that there's many people in the population that may be deemed as unbanked or non-banked or whatever the current buzzword is, but there are people who don't have bank accounts at this point that end up getting these checks and then paying a fee to a check casher or somewhere to go and cash their checks in order to have their money. They've been working with some of the cash apps to be able to have direct deposits go to some of those apps as opposed to issuing checks. It's still a work in process, but the take from this year for all of us as CPAs is that the IRS is really requesting us to take a little bit extra effort when we're talking with our clients to promote the necessity for direct deposits. It's one where in many cases, I mean, I filed a return last Monday, and Friday night I got a message from my client saying, wow, that was quick. In 4 days, the refund was in her account, as opposed to potentially waiting 4 to 6 weeks to get a check in the mail, then having to go to your bank to cash a check, and then waiting for a check to clear. So it's much quicker. But what the IRS is hoping is that the 10 million outstanding checks, many under $50, can start to go away. It makes everything easier within Treasury, which of course that's not our obligation. Our obligation is to make things easier for our clients. And it's one where this certainly will make things easier for clients. They'll get their refunds significantly quicker. They have the ability to split the refund into multiple bank accounts if that's what they so desire. And in the world of washed checks and so forth, they don't have to worry about any checks that may get diverted or stolen and then have to deal with going back to the IRS and requesting that a replacement check get mailed. I've dealt with that, and I'm sure many of you have on the call today have been dealing at some point over their career with having someone's refund check reissued. It's not an easy process. It's not something that happens overnight, because obviously the IRS needs to make sure that the check is outstanding, and when they're looking at over 10 million outstanding checks, it's something that they really need to try to whittle down and take that out of the equation. Of course, as we're saying, with the new W-4 forms, there's less and less people that are actually getting refunds at this point, but it's certainly one that people are still, if they're looking for refunds, it's certainly in our interest to suggest that they do that. And in fact, whether it's in organizers or even in communication with clients, when they come in to meet with you or to drop off their papers, ask them to go the extra step and ask about having bank account info for direct deposits. And we have polling question number 4. So if everybody would take a few moments and answer this question, be great. While you're answering that, we go to the next slide, please. Thank you. This was a slide that came from the presentation from Treasury on Thursday, and it's just one that just driving home some of the points that I just made, and they're just asking us to take that extra step, do what we need to do, try to help our clients, because this is certainly a big bonus for our clients. They get their money a lot quicker, and it's seamless at this point. You don't have to wait for a check to come in the mail. You know when it's coming. There's a lot better tracking. Now if someone's looking for a refund, that they can go to the IRS website and they'll actually see, oh yeah, your deposit's supposed to be hitting your account on this date. If you don't hear anything or you don't see it in a few days, reach back out to us. And it's a lot easier than waiting for a check to get generated by Treasury, to get mailed, then waiting for delivery. It's one where it cuts a lot out of the equation, and it's certainly one that I've been really pushing with my clients for probably for 20 plus years at this point, and primarily for the reason that I had mentioned earlier. it hits your bank account a whole lot earlier than getting checks. And that was before I started doing electronic filing. So we're probably talking late 90s at that point, that direct deposits were that much quicker. And I believe that's the end of my presentation, unless there's any more slides for me. Sorry. Return of the 1099K. How quickly I forget. One of my favorite topics. Effective January 1st, the rules surrounding 1099K are back in effect at this time. They may change, but keeping in mind, as of right now, the $600 no transaction limit is back in effect, as well as no aggregation of transactions. The IRS FAQ on ticket sales comes out and clearly states that you cannot aggregate any of your transactions. If you have tickets to 2 different games, you make money on one, you lose money on the other. You have to report the money that you lost would go on, I believe, the money that the one you made money goes on to Schedule D as a capital gain. The money that you lost goes on to Schedule 1 in 2 different spots. Part 1, I believe, of Schedule 1 for the income, and the amount of the ticket, the same amount would go on to the second page of Schedule 1 to show the washout of the income. It's going to be a paperwork nightmare. Hopefully it will change. I've already started pressing the IRS, both locally and nationally, that this needs to change. But until it does, as we're meeting with our clients, they may get a 1099K under these rules. The IRS is not enforcing them, but it's certainly one that would be a very good reminder to talk to your clients about what they need to do for the 1099K. Inherited IRAs, my other favorite topic. The Secure Act of 2019 changed the rules. Didn't really change much last year with Secure Act 2.0, but keeping in mind, it came out with a 10-year time frame to liquidate the account. IRS proposed RMDs except for 21 and 22, and that is not what's in the law, but that's the IRS interpretation at this point. And keeping in mind its proposed regulations, nothing's been official yet, but keeping in mind the failure to withdraw currently is a 50% penalty. And I know from personal experience and from what I've seen so far, the 5498s are not showing on inherited IRAs that there's an RMD requirement for 2023. So it's one that's ripe for a lot of issues. And also keeping in mind, inherited IRAs also includes Roth IRAs. I'm not sure if that was the intent of the original bill, but it's certainly the intent of the IRS proposed regulations.
Okay, Steve,
Yes.
we do have a few questions for you. Also, Frank Sands, if you could come back on as well. We have a couple of follow-up questions that came on after you finished your Q&A. So first for Steve, would a client investing in a digital asset fund trigger a yes answer?
Simply investing is really a no. And at this point, if all they're doing is accumulating, but it's one where there's the gray area that if you move within your digital wallet, if you move from one digital wallet to another, could that be really deemed as a transaction? And it's one where you may be better to err on the side of caution and answer yes to that you've received this. That's certainly a gray area, but it's one that you really need to be careful as you look through.
So would you say that if you do anything involving digital assets, you should say yes, even if it's not directly done by you?
Yes, I think you're better off. It's one where you're at least setting the stage where you can say, oh, no, it's easier to say, oh, I thought that it was including all of this, and I wanted to make sure that I disclosed the fact that there were digital assets, as opposed to the fact of, oh, wait, it needed to include this, and I didn't say that I had digital assets, and now have other issues.
Okay. Our next question is, what is the IRS doing to ensure that a refund is getting into the correct bank account, since they want us to push direct deposits? This person previously posted in the chat that it's very frustrating when the money goes into the wrong account.
Well, number one, when during the conversation at the NPL meeting on Thursday, I've raised again an issue that I've raised a number of times with the IRS, Treasury, and Congress about needing to do a pre-notification checker of the account before the money's actually sent. There are a number of financial institutions that if the name doesn't match the account, will kick it back. The unfortunate is that's the exception, not the rule. There's currently no requirement that the banks, the credit unions, or whomever needs to verify anything because it's a federal deposit coming in. What we need to do on our end at a minimum is double check the banking information with our clients when they're coming in to make sure that things haven't changed. There's times where there's bank mergers that they may continue to accept under an ABA for several years, and then all of a sudden they change and say, oh no, we need to have the new ABA, but they'll still keep taking the checks without having any change. So unless someone's intimately familiar with needing to provide that to the CPA, it's easier on our end to just ask the question, did anything change on your banking info? And same routing number, same account number. If it doesn't match, ultimately the money should be sent back to the IRS, and then a check mailed out to the individual, to the taxpayers.
This was not on the presentation, but somebody asked about the Corporation Transparency Act that goes into effect next year.
That is one where I believe that's with a lot of the names and so forth of all of the owners within a business. And that's one that I believe is still getting changed around and kicked around a lot. But I can look further into that as we get ready for our next presentation later in the year.
Okay. Our next question is that the IRS waived the penalties for not taking required distributions from inherited IRAs in 20 or 21 on the new 10-year rule. Does that mean in 2023 you have to do a catch-up for those years along with the 23 RMD?
No. The way I understand their interpretation is that because of issues surrounding COVID and so forth, that they are not enforcing the RMD for those years, and that you would have to take your regular RMD for the remaining X number of years, with the understanding that at year 10 of death upon the decedent, that you would have the account fully liquidated.
On just a follow-up comment from the person who asked the question about the direct deposits going into the right account, they write, in my case, this was nothing to do with the bank merger. The IRS put it in an account that was not my taxpayers, and nothing has changed for my taxpayer.
And that's the first thing I would say is, do we know that Was it the IRS that put it into the wrong account, or was it the financial institution that misapplied the payment? Because the IRS would be getting the information based upon what was submitted on a tax return. It's possible that the financial institution may have misapplied something.
It is
And
also.
if that's not the case, then I'd also do some checking to make sure that nothing got changed in their system and that there's no potential breaches.
I know for myself, with a couple of clients, they've had issues, and it turned out that I put in a wrong number, or I left out a number. So if they did get their refund, but they got it eventually as a check.
Correct.
So obviously, it's very important that we get a copy of a check from the client and double and triple check when we put in the information.
That is absolutely correct. And
Oh,
also keeping in mind that you're always better to use a check as opposed to a deposit ticket that they may have, because a deposit ticket may have a different number listed for an ABA than what's the actual ABA for the financial institution. And if you're not sure, there are some websites out there that you can do a lookup of a bank ABA, just keeping in mind that some of the larger national banks may have different ABAs depending on where they're located at.
the individual has posted one final comment. They said it was the IRS. The taxpayer had no account at the institution. The IRS sent the refund to, and they have opened a fraud investigation. So it sounds like an identity theft issue more so than, sounds like an identity theft issue.
Yes, they're certain that the return was accepted. Because if the return was accepted, and I'd also, not to put the fear of God into people, but I'd also be checking to make sure that there isn't a potential breach into the practitioner system.
Okay. Here, someone just posted a question. Any chance you can get Congress to recognize that a 50% RMD penalty is unreasonable?
I believe that is in the works with some current legislation to significantly drop that percentage down. I think the intent of the 50% was to make sure that the people actually take the RMDs. It was more of an issue when someone turned that 70.5 that we, under the old rules, where it was always a question of when's your half birthday and did you take it by April of this year. It was always a bigger concern of did they take the right RMD in the first year. At this point, it's not as much of a concern, other than making sure that you take out the appropriate RMD, keeping in mind it's not on each specific account, but within each class of asset that they need to take an RMD out of.
Okay, thank you, Steve. And we have one question for Frank. Is the IRS still having hiring and training issues? How will that affect everything you've talked about this morning?
Yes, the IRS is still having training and hiring issues. It takes a while to onboard these people before they become effective. I know recently I've heard they've hired like 5,000 new folks to assist with their communications efforts. Jury's still out on how that will help. But because of that, we know that we can still expect delays in communications and responses to our letters or our phone calls, etc. It's still going to be frustrating. Sorry, there's no better answer for that.
Thank you, Frank. And just remember, everybody, the Inflation Reduction Act calls for the hiring of 87,000 people at the IRS over the next decade. Not right away. They all will not be agents handling audits. It's also the support personnel, you have a number of people who have been at the IRS for 20 to 30 years and up, and they're at retirement eligibility, and they're starting to do that. So whenever somebody talks to you about all these new people auditing, don't worry about it, because we still have to wait to see what happens. Okay, we're now going to go to polling question number 5. Everybody take a moment. And as we do that, we will be going to our last segment of today's program. Norm Fleischer, who is now NCCPAP Executive Vice President and from the New Jersey chapter, will be talking about the issue of engagement letters and how they protect us and our clients. So without any delay, Mr. Fleischer, welcome.
Thank you very much, Neil. And going forth with Frank's, can we advance the slide? There we go. What Frank mentioned before, there was that only 40% of us use engagement letters. I hope by the end of this presentation will be 60% at least, or 100%. All right, engagement letter is a contract between you and your client. It spells out what you'll be doing for your client and what your client responsibilities to you are. And it's important to cover your assets. All right. For instance, the date when all information is required. What is your cutoff date? If you don't have a cutoff date, someone could give you the information April 14th and expect to have the return done by April 18th this year. Could we have the next slide, please? Whoops, I got it. Okay, there we go. For example, what will be prepare your 22 joint federal and only the income tax returns for the state of New Jersey. That's an important information. What will you be doing for your client? What state returns? Later on in the presentation, we'll talk about Nexus. But the opening paragraph of my engagement letter is, this letter is to confirm and specify the terms of our engagement with you and to clarify the nature and extent of the services we will provide. My engagement letter could run 8 pages long. It's better to have an engagement letter that covers more than less. There's limited scope. What you'll be doing, what you will not be doing. You won't be auditing the information that you receive. All right, you're not there to the engagement cannot be relied upon to disclose errors, fraud, or other illegal acts. However, it may be necessary to ask you for clarification of some of the information you provide, and we will inform you of any material errors, fraud, or illegal acts that come to our attention. We may rely upon other tax preparers for K-1s and what have you. We have to take responsibility that that's not our work product, that someone else prepared it. Steve went over virtual currency very well, but I have a paragraph in my engagement letter. Did you buy, mine, sell, or exchange a virtual currency? Use a virtual currency to pay for goods and services, or receive virtual currency as payment for goods and services? Be sure to let us know. The engagement letters, as we said, specifies that it's only for federal and New Jersey, in this instance, tax return. There'll be a separate engagement letter for bookkeeping, corporate partnership tax returns, etc., and so forth. Don't give one massive engagement letter. It's better to have separate ones for each engagement. Next is, what is our responsibility as preparers? What happens if they receive a K-1 from their New Jersey clients and they receive a New York K-1? Well, in the original engagement letter, we only stated we'll do New Jersey, but now we have to amend the engagement letter stating that we have to file a New York non-resident tax return. Okay? Instances where the law is unclear. And what happens if you have the counter instances? Knock myself off. What we may encounter instances where the tax law is unclear and where there may be conflicts between the taxing authorities, and we have to interpret the law. We have to let the client know about that. Think about getting a retainer before starting the engagement. If it's a new client and you don't know them from Adam, it's possible for you to get a engagement letter and get a retainer for them. Terminations of services. If we elect to terminate the services for non-payment or any other reason provided in this letter, our engagement will be deemed to have been completed upon written notification of termination, even if we have not completed your return. You will be obligated to compensate us for all time expended and to reimburse us for all out-of-pocket costs through the date of termination. This engagement letter is our engagement letter. It benefits us. It should not benefit the clients. How do you receive information from clients? Is it through your portal, through mail, faxes, emails, and texts? I haven't spelled out that I will not accept text information. That's number one. It's time consuming to look through the phone to see who received, to see what I received, and then try to download it and get it into my file. Records retention, how long? You should state how long you're going to keep the information. And it's some years, my engagement letter says 7 years. The 8th year, I delete all the information. It's no longer available because in case you get subpoenaed, if you said you keep it for 7, and all of a sudden you have 14 years, you have an issue. Subpoena or other legal process. In my engagement, what happens if you have a client, they've been a client for 7 years, or however long, and now all of a sudden they're getting divorced. So they want copies of all tax returns, all correspondence, all backup information. Well, that time has to be paid for. So I have it in my engagement letter that in the event that we are required to respond to a subpoena, court order, or other legal process for the production of documents or testimony relative to information we obtained in preparing it during the course of the engagement, you agree to compensate us at our hourly rates as set forth in the time we spend in connection with such response and to reimburse us for all out-of-pocket costs incurred with that regard. Again, it's covering our assets. It's important for us to know it. Now, the engagement letter is deemed to be signed in your office. And by that, what I mean is that in case you have to go to mediation or litigation, you have the state, the laws of the state that you live in behind, or where your office is behind you. I don't want to have to know what, go to court in New York to get, if I have an issue with a client. I wanted it to be in my state. Again, going through the mediation clause, notwithstanding anything contained here in both accountant and client agree that regardless of where the client is domiciled and regardless of where the agreement is physically signed, this agreement shall have been deemed to be entered into the accountant's office located at where you're located. And you agree that any dispute other than efforts to collect an outstanding invoice that may arise regarding the meaning, performance, or enforcement of this engagement or any prior engagement that we have performed for you will, prior to resorting to litigation, be submitted to mediation. And then you have spelled the mediation thing. And that's all. That's a quick overview of the engagement letter. Like I said, my engagement letter is 8 pages long, and I get it all back except from one person who's an insurance agent who refuses to sign it, but he signs another letter stating that I prepared his return.
Hey, Norm, we have a few good questions for you.
All right.
First of all, we've had several who are asking, could you provide a copy
It will
of your engagement letter that you give to this 8-page engagement letter?
It'll be provided later on this week.
Okay. Follow up on that is, how long should an engagement letter be kept?
I keep it for 7 years, just as I would in my record retention. Because what happens again, and in the case of the divorced clients, you may not know about it now until later on.
Okay, another question is, do we have to have a wet signature on the engagement letter, or is DocuSign okay?
I've had both, so I accept DocuSign, and I accept, computer signatures also, as through DocuSign.
And with the wet signature, you also accept it if they, excuse me, sign it and fax it or scan and email it to you, correct?
That is correct. I don't need the wet signature.
Okay. See, do we have any? Oh, here's one. Have you changed or updated your engagement letters over the years? In other words, what did you learn from your own experiences and how did you adapt your letters?
Oh, well, one instance is the digital assets. 5 years ago, I didn't have that in there. Going back even longer, I didn't have information about foreign assets. Now those are both, spelled out in the engagement letter.
Okay. Someone's asking, why the 7-year retention? The IRS only requires that we keep returns 3 years from the filing date.
And talking with my malpractice carrier, they said 7 years is fine. Everything of mine is digital, so I don't have paper copies, so it's easy for me to keep it.
Well, first of all, somebody asked if you could move closer to your microphone, Norm, sorry.
It's okay.
Okay, but also with regarding that, we know that if somebody is audited and audits are coming back, that the IRS could go back 3 years automatically. And then based on that, they could go back another 3 years beyond that.
Correct.
And if they want to go further, they have to prove fraud.
Mm-hmm.
Or in some cases, like for example, if it's the Schedule D carry forward losses, they could even require it to go back further.
Correct.
But the 7 years you feel is a safe harbor.
Yes, it is.
Hey, one last question right now. Do you sign a new engagement letter each year or an update?
No, new engagement letter every year. It's not evergreen.
Okay. Let me go to the chat because some people have apparently posted some questions in there. Somebody posted that New York is the 7-year rule. There. And a couple people have posted hands raised, but we're waiting to see if there are any questions coming in from them. We don't see them. So at this point, Norm, I'm going to thank you very much. Oh, we have our final polling question of the day. Polling question number 6 is up now. So if everybody will take a moment to comment on that. Somebody made a comment here. In some situations, 10 years is required by contract or for specific types of government work, although not tax related. So I guess if you're doing government audits or government work, you have to check to see what the rules are regarding record retention. And it is best to check within your respective state to see what their requirements are regarding record, how long you have to keep everything. And I know it's easier now because with everything being saved digitally, we do not have to spend as much on storage space except for our own papers. So Norman, thank you very much. Let me see, do we have any? Oh, wait, we have a couple more questions. Oh, someone wants to know how we're going to get a template of the letter. I guess, Norm, you'll send it to the national office.
And I'll let them disseminate it.
Okay, thank you very much, Norm.
Thank you very much, Neil.
Okay, so with everybody, before we let you go, just a few things. Just a reminder that the next national meeting is May 10th through 12th in Washington, D.C. Now, remember, anybody can come to a national meeting. Anybody can participate. We invite you to come. We invite you to get involved. If it's your first time coming, make sure you let us know, because after we have scheduled the appointments, we put people into groups so that they go around to the various appointments. And this way we put people who have never been there before with people who have been there for several years. Through this process, it's a great experience. I heartily encourage it to everyone. Again, if you have an issue, and as Steve pointed out, it should be a systemic issue, not just a specific issue for one client. But if you see a pattern of some kind, if you think that something needs to be addressed, whether by Congress or by the IRS, please reach out to the tax committee. Let the tax committee know what you think the issue is. They will reach back to you and talk with you to make sure that the issue is properly presented in the agenda. Okay, so again, once you log off, you will be getting a survey. Please take a few minutes and respond to the survey. The slides are already available, and they will be available on the NCCPAP website. The recording of this presentation will be available in a couple of days. You will receive an email for that. So on behalf of Norm Fleischer, Steve Mankowski, Frank Sands, I want to thank everybody for attending. Have a safe, a good, a healthy, a hopefully not so stressful tax season that we've had for the last few years. So on behalf of NCCPAP, this is Neil Fishman thanking everybody for attending. For those of you who have come for the first time and are not a member, again, we encourage you to become a member and to get involved. So ladies and gentlemen, thank you very much.